Hello and welcome to Technical Analysis here at XM.com. It's Thursday, June 7th. I'm Christina Bartholomew, investment analyst, and today we'll be looking at the British pound versus the Japanese yen on the daily chart. So pound yen has been on the upside this week, recovering after a sharp fall to a more than a 9-month low of 143.18 on May 29th. But we can also see that gains so far were not enough to break this downward pattern started from 153.83 in mid-April. Now in the short term, we have some bullish signals coming from the MACD, which is stretching up above its red signal line to reach zero. The RSI here is also trying to deviate above its neutral threshold of 50, but it's still very close to it. And looking at stochastics, those are in overbought territory above 80, on track to post a bearish cross. Therefore, in the very short term, we can't exclude any downside movements yet, while we also need to see stronger bullish signals from the RSI and the MACD before we say that positive momentum could continue in the short term. Now if the price heads to the upside, the 50% Fibonacci of the down leg from 153.83 to 143.18 could be met first. This is at 148.50 and slightly below the 50-day moving average, currently at 149.14. Though above from here, we expect a bigger challenge to come from the 61.8% Fibonacci of 149.76 because any decisive close above that level could break the previous peak of 150, violating this downward pattern and suggesting at the same time that an uptrend is in progress. The level also overlaps with the 200-day moving average, so this should be another reason to pay attention to this area. Now if this mark fails to hold as well, the next target could be the 78.6% Fibonacci of 151.54. On the flip side, a dip in the price could find immediate support at the 38.2% Fibonacci of 147.22, where the 20-day moving average is currently located. Even lower, we also have the 23.6% Fibonacci of 145.67, while we expect negative momentum to pick up speed below the 145 key level, where we saw a rebound in early March, making the way towards the previous low of 143.18 much easier. Finally, turning to the medium-term picture, the market here is neutral given its range-bound performance over the past 3 months. The outlook had turned somewhat bearish after the close below the 145 key level, but then we saw the market bouncing back into range, and now the outlook could only turn bullish if the price manages to rally above 153.83. So that's all from me. Thank you for watching and have a great day.